In the bond market moment, bonds are still a safe haven for investors, but this week a shift is happening as investors are starting to want to make money in riskier assets. Let's bring in Sean Dranfield, CEO of PTAM. Good to see you, Sean. What do you say? Is risk more on or off in the bond market?
Thanks very much, Angie. Appreciate being on your show. I'd say the bond market this week is signaling risk off. So credit spreads have tightened, the stock market's done well, and interest rates are down a little bit. So certainly risk off.
High yield bonds, often referred to as junk bonds, are doing better at the moment than the safety of long bonds such as the 10-year Treasury. Are junk bonds a good place to be at this time, and what's happening to make high yield bonds attractive?
Yeah, so I'd say it depends. So the honest answer is the reason why high yield is outperformed is because rates have come down and credit spreads have tightened. So it's like a double whammy for high yield bonds. Whereas with treasuries, rates have just come down a little bit, but they haven't benefited from credit spreads because they have no credit spread attached to them.
What's better to get into though, longer bonds or those shorter bond durations?
Yeah, so I would say the opportunity cost today of staying short is a little greater than it was a month ago because credit spreads have widened a little bit on investment grade corporates, on high yield corporates, on municipals. So the go forward total returns of those bonds are now more attractive than they were relative to short-term treasuries. So I would say it's an attractive entry point to consider adding a little bit of risk because you're getting extra go forward returns.
We would love if you could highlight some of the risks associated with putting money into junk bonds.
So I would say junk bond investing is largely correlated to the economy. So what you want to be very careful about is avoiding default risk. So you really want to try to have somebody who's able to discern good credits from bad credits, particularly when you have a market that might be recessionary, and we just don't know if that's going to happen. So be careful about the risks you take in the junk bond market.
We will leave it there. Thank you for your bond market update, Sean.
Many thanks for having me again, Angie. Appreciate your time.